Welcome. Accounting and Management Made Simple is your channel of choice where we break down complex and difficult accounting and management principles into simple, understandable concepts. Whether you are a student preparing yourself for exams or a professional looking to apply knowledge practically, this channel helps you to grasp and understand complex key topics with ease. Please subscribe, share, like, and comment. Thank you. Hello students. Today I want us to study about accounting for discounts. There are two main types of discounts. There is what we call trade discounts, and there is what we call cash discount. There is what we call trade discount and what we call cash what?
Discount.
Cash discount. So what is trade discount? Now, trade discount is the discount given for bulk purchase. It is the discount given when you buy goods in bulk. You buy a lot of goods. Now, you may have a business. Somebody may be having a business, or you may be having a business. And you are selling motorbikes. You're selling what? Motorbikes. And each of the motorbike goes for 100,000 shillings. If you come and you're buying one motorbike, you will have to cough and you'll give us 100,000 shillings. But if you decide you are going to buy 20 motorbikes, you find us now selling, okay, if you're going to buy 20 motorbikes, we are going to sell each one of them to you at 90,000. Now, we are giving you a discount because you are buying many. We are giving you a big discount because of your bulk purchase, because you are buying many. So, at the point of purchase, a trade discount is given at the point of purchase. So, what are we saying? Because we already know at this point, we will not, instead of selling you the 20 motorbikes, the value is 20 times 100,000 each. Instead of selling to you 2 million shillings, we now have to sell them to you at 90,000 each, 20 times 90,000, and that becomes 1,800,000. It means we have given you a discount of how much? Of 200,000. Now, when we are recording this kind of transaction, we record it net of the discount. We subtract the discount, and both the buyer and the seller, they will record it net of the discount. What will the seller record? What will be the seller record? The seller is making a sale. And maybe we are receiving cash or money in the bank, or we're even selling on credit, trade debtors, or we are selling on credit, and therefore there's an increase in what? Trade debtors. And we are saying we have 1 million. Instead of recording 2 million, our receivable is 1.8 million. Why? Because he bought 20. Because he bought what? 20. Then we credit sale. We credit what? Sale. We credit sale account. We have made a sale worth 1,800,000. We have made a sale worth 1,800,000. What does the buyer record? The buyer is doing a purchase. The buyer is doing a what? Purchase. So he will debit purchases. He's purchasing inventory. His debit purchases 1,800,000. Please, he will not record anywhere 2 million anywhere. He will not record 2 million anywhere. it is recorded net of the discount. It is recorded net of the what?
The discount.
Discount. And we credit either cash, if you are carrying cash in bags, or bank, we're giving a check, or trade payable, or trade what?
Payable.
We could even be having a liability. We could could promise that in the next 1 week, we are paying the money. It is called trade discount. It's called trade what?
Discount.
We record it out in our books of accounts, be it in the seller's book of account or in the buyer's book of account. We record it after deducting discount. We record it after deducting what? Discount. And it is given because of bulk purchase. It is given because the person is buying goods in bulk. If you get a question that is telling you, that on this date, Peter bought motorbikes worth 2 million shillings, but was given 10% discount. At the point of purchase, you must ensure that you deduct the discount and you record the purchase net of the discount. Then we talk about cash discount. We talk about cash what?
Discount.
We talk about cash discount. What is cash discount? Cash discount is discount given for paying your debt. Before a specified date. And therefore, you can see the differences. Trade discount, you can purchase in cash, you can purchase on credit and get trade discount because you've been given the discount because of buying in large numbers. But now in cash discount, you must have bought or sold the inventory on credit. You must have bought or sold the inventory on what? On credit. And therefore we are encouraging our customers to pay early. And we are telling the customer, if you pay before the end of the month, we will give you a 20% discount. A 20% what? Discount. So we are selling on credit. In cash discount, we have sold on credit. At the point of sale, we don't know whether the person will pay we will pay before the end of it. We do not know. So we at the point of purchase, or let's assume we are selling. At the point of sale, assume that we are selling goods worth 2 million shillings. Now, and you're telling the person, if you pay us before the end of the month, we will give you 20% what? Discount. We give you 20% discount. Assume that we sold goods worth 2 million shillings. At the point of sale, we don't know whether the customer will pay before the end of the month. We do not know. And therefore, we record the whole of the debt of 2 million. We do not deduct the discount. We do not deduct the discount until the day the customer will come to us before the end of the month. So at the point of sale, we are selling on credit. So we debit trade debtors to record a receivable. We debit trade debtors to record a receivable, and we credit sale. And we credit what? Sales account. So let's say 2 million. To what? 2 million. Now, this customer, before the end of the month comes back, this customer comes back before the end of the month. And we told the customer, if you pay before the end of the month, we will give you a 20% discount. So we recorded the sale without deducting discount, but at the point of payment, when he is coming to pay, that's when we are going to deduct the discount. So we will not receive 20% of 2 million is 400,000. So we will receive 2 million minus 400,000. So we receive 1,600,000. We receive 1,600,000. And what are we receiving it from? We are receiving it, we are collecting our debt. We are collecting our what? Debt. We are collecting our debt, and therefore our debt is going down. Our trade debtors is written off completely. We remove it from our books completely. The 2 million. But the customer is not paying us 2 million. The customer is not paying us 2 million. The customer is paying us how much? 1,600,000. The difference is discount allowed. We have allowed the customer some discount. So this is bank. We debit bank account 1,600,000, and we also debit discount allowed. We debit discount what? Allowed. We debit discount allowed of 400,000. Instead of receiving 1.2 million, we are receiving 1,600,000. The difference between 2 million and 1,600,000 is a discount which we have allowed. Is a discount which you have done what? Now, discount allowed is an expense in the income statement. When you prepare your income statement, among the expenses you will record is an expense called discount allowed. Why is it an expense? We are writing off our debt. We are writing off a debtor of 400,000. We are writing off a debtor of 400 what? Now, what happens when we do the purchase? This is when we are selling. But what happens when we are purchasing and we are being given a cash discount? What happens when we are purchasing and we are given a cash what? Discount. We are saying even when we are purchasing, we cannot say with total clarity that we will pay before that date. We pay before that date. And even if we did, accounting principles demand that you record the whole liability. You record the whole what? So at the point of purchase, we debit purchases. We debit what? We debit what? Purchases. We debit purchases account 2 million shillings, and we credit trade payables. We credit trade what? Payables. We are recording a liability. We are recording a liability of 2 million shillings. We will have to pay. We can choose to pay before the end of the month and earn our discount, or we can choose to keep the money and pay later and lose our discount. So if we decide at the point of payment, before due date, before what? Due date. Before due date, we will debit. We are paying trade creditors. We are paying what? A reduction in a in a liability. We debit the liability account. We debit the liability what? So we debit trade creditors. We debit trade creditors, trade payables account with how much? With 1,600,000. That's what we are paying. No. We debit trade payable. We write off the whole debt. We write off the whole debt of 2 million. We write off the whole debt of 2 what? But we credit bank with 1,600,000. Our money in the bank is reducing with 1,600,000, and we also credit discount what? Discount received with 400,000. We credit discount received with 400,000. We write off the whole debt, but the only money we are paying, we're not paying 2 million, we are only paying 1,200,000, and then we are earning ourselves a discount of 400,000. We are earning ourselves a discount of 400,000. Mark this, at the point of payment, we write off the whole debt, but we're not paying the whole debt. At the point of collecting money, we are writing off the whole debt here, but we are not receiving all the money of the whole debt. So when this happens, discount received account is an income. Is an income. And it's an income because it was earned by the act of us paying before the due date. It is an income because we earned it by paying before the due what? Before the due date. And therefore, when you go to the income statement, you'll be saying gross profit, add other incomes. One of the other incomes is discount received. One of the other incomes is discount what? Received. It is an income. It is a what? It is an income. That is how we account for discounts. That's how we account for what? Discounts. Once again, I want to ask you, please subscribe, share, like, and hit the notification bell so that when we have this kind of videos, we'll be always informing you. Thank you very much.